but we have with us Hari Mohan Bangur, who's the managing director at Shree Cement, to talk to us about about the outlook with regard to the cement space to start off with, and also the possibility of reducing costs of freight as well as the cost of moving cement, which we have a new policy for. Mr. Bangur, let me start off by understanding from you how realizations are evolving over maybe the last month or so. How are things shaping up? As has there been a ramp up post the monsoon in terms of growth as well as demand?
In fact, after the GST cut, the prices are constant. No price increase have been taken place, net of GST. So the company realizations are almost the same, less than a 0.5% difference, plus or minus. At some places it may be minus also. So traditionally, after November, after 10 days after the Chhath Puja, the Bihar labor comes, the demand increases, the prices increase every year. So this year, this phenomena, we expect it to start from today or tomorrow, 20th or so. So we are expecting better times. That's all I can say. But in every year, this is the phenomena. So July, August, September is the weak season monsoon. October, November, plus or minus. Sometimes it is somewhere good, somewhere bad. But post Diwali, it will be everywhere. Till June, there is a good season. We expect to have a better consumption this year because the government's budget, government's infrastructure policy should push us up.
Mr. Bangur, morning. Also, the recent announcement from the railways, right? They've announced a change in freight rate structure, and freight will now be charged on actual tonnage and not based on containers carrying capacity. What will this change mean for the cement sector, and how much will the freight cost come down by?
The freight cost, because the railway has said only half the things, when the railway wagon returns to the base, because nobody has the both way traffic of the similar volume. So while returning back, they will be charging us 50%. So effectively, the freight will come down definitely, but not by a big margin. So what is seen, the railway is right in saying what they are doing, but it is not the full picture. Partially, more cost will be there. So we have to see from time to time, place to place, where we can give return traffic to take maximum advantage.
And Mr. Bangur, rail share currently stands at around 11% for you, which you're looking to increase to 20%. With the new freight rate structure in place, has achieving this target become easier and more lucrative for you? And are you now looking to increase your rail share target? In fact, even above 20%, if at all, that is something on the anvil?
Rail freight target will be definitely easier to achieve with lower freight, but at the same time, it cannot come easily. Everybody has their own setup of transporting. In cement, you have to understand that we are giving load delivery up to the customer's place. So for rail delivery, you have to first go to the station, then again one more handling at 300 rupees a bag, roughly. That is 6 rupees a kg. Rehandling is also a big cost. So we have to see where we can give from railway. If it is 400 kilometers or more, railway will be economic. Otherwise, normally, with so many grinding units, we had gone for more of road dispatches. Gradually, it will change. Definitely, rail is more effective, and within what we are thinking of 400 kilometer will come down to 300 kilometer. But nearby plants will be served only by road.
Mr. Bangur, a lot of analysts believe that you've been comparatively slower than your peers areas in terms of capacity expansion in one of your core markets, which is the North region, which led to market share loss as well in the second quarter for you. What are your thoughts on this?
Using and creating more capacity doesn't convert into sale. As it is, our capacities are a little empty. Anybody who newly comes into the market will definitely gain some share. But when we see one thing that is most of the analysts don't do, but we track it, that per ton of gross expenditure, how much sale we are doing, number of tons of sale compared to the gross expenditure, capital expenditure, we are still the best. Because you can create capacity, increase some sales, but then still the industry is running only at 70% capacity. Lot of capacity is there. Instead of that, we are spending money on cost saving measures. Now we are very proudly saying that more than 65% of our energy use, electrical energy use, is coming from renewable or waste heat utilization, which is a fraction of the cost. So cost saving is also our focus, not capacity expansion, but you see we are 65%, nobody is even about 45%.
It does impact your market share, right? Doesn't it?
Market share will, whenever any new factory comes in the nearby market, they will take something. But our market share is not going down quite as we are pretending. It has gone down by 1% over 4 years. 1% over 4 years. And that is also a deliberate decision that we have increased our prices and made more focus on premium goods. So our profitability share in the last 4 years will be definitely increasing. Market share may decrease, but profitability share will increase.
And the 80 MTPA target, which you have by FY28, well, the analyst community not exactly confident that you can get there. How convinced are you with that target that you've given?
First of all, the target was for 29 and not 28, and we are definitely going to achieve it. We are confident, but 28 was not the target, never given it.
Point taken. Mr. Bangur, any sense with regard to how pricing is evolving? You've said that November to June will typically be a stronger season. Now, most analysts are waiting for a possible price uptick to happen, which could lift the EBITDA per ton. Is that at all on the anvil, according to you, given the visibility you have?
I am also waiting as the analysts are waiting, because the market will behave. We are all expecting. So only after 10 days we can be more confident of what is happening. In this year, the rains and the monsoon was good. The soil has enough moisture. Good productivity of agriculture will be there. That is the added reason that spending power with the general public or the village people have increased. That will also increase the market size. That's all we can say at this time.
I don't think I got that right. So you're saying that maybe in 10 days or so you'll have better visibility of how pricing will evolve. Is that understanding right?
The pricing is a factor of demand. If the demand increases, then only the price will increase. Artificial price increase cannot be there. Sustainability of that price increase will not be there. So we are waiting for the demand. And if the demand increases, the price will definitely increase.
Okay, Mr. Bangur, we'll leave it at that. Thank you so much for coming in and speaking with us.
Thank you.
Right.